What's happening, guys? Another Monday night scan. This time it's President's Day. We only have 4 days this week for trading. But as you guys know, I absolutely love days off because you can fully, kind of get out of the market and not worry about, what's moving when you're away and, have that kind of anxious, what am I missing kind of feeling throughout the day. And I know not everybody has that, but most of the trade hard kind of guys and ladies that, this is your passion and this is what you do, you know what I mean. And it's always nice to be able to fully disconnect and not really worry about, what happened on the day that you missed. So as always, any of the full days off that we get, the market holidays, I'm all about them. Went up to Omni Mount Washington in New Hampshire, Carroll, New Hampshire. It is right across from Bretton Woods, so skied there. Usually I go out there with a bunch of traders once a year. We get a condo and it's a really good time. But since COVID, the place that we typically rent, they ended up selling it. So I'm in the hunt for a new spot, but I can't wait to start doing that maybe as soon as next year because we always have a great time. And it's a great spot, great, you can do ski, lodge, food. It's all everything. You don't have to have a car. You can just kind of take the shuttle and enjoy yourself. So, a lot of people are still having difficulty in this market. I get it. It's totally different than what you've learned. We've talked about this for a long time that, everybody's been so spoiled with, you just have to buy the dip. And everything kind of works out, and it's really trained everybody for the last year or two or more that that's the right thing to do, and everything will work out in the end. And just like I had tweeted, and just like we talked about, I don't expect this market just to be like, all right, we're going right back to the highs. There's too much going on right now, and I think we're still going to be in that 2 to 3 month consolidation period, and then we're either going to grind back up or break down to new lows. And I don't know which way we're going to go yet. But I do know that anytime that you're feeling super, super, super bullish, it's probably nearing a peak. And anytime you're feeling super, 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 super bearish, it's probably near a bounce. And it's been like that for, a couple weeks now. I expect it to be at least another 2 or 3 months. And so what that means to me is be a trader. Stop thinking that you know it all. Stop thinking that it has to do one thing or has to do another. It doesn't. We're in a cycle of we're going to be working out size. We're going to be working out, oversized type traders. We're going to be working in new people, work them back out, and you name it. It's going to take a while. And, nothing just, gets fixed overnight. And the only thing that can fix this is time. There's going to have to be a long consolidation period. The only fear that I have is that given the amount of volatility that we have, once this starts to slow down, the liquidity is going to get shot. And I don't really have a fear in the next year or two. I think this could last another year or two of intense volatility like this. But after that, makes me a little bit nervous just in case we start to go into that, period of time where there's just, not that much liquidity. And we've seen it before, but that's why we need to take advantage of times like this. And, as I said, when people were asking me, well, what inning we're in, I always say it's low innings because I know how to short. I prefer to be on the short side. I prefer to be sizing on the short side. I have more confidence on the short side. I do a lot of longs and I take a lot of longs, but I have trouble really sizing in and scaling in and getting after it on those long trades. On the short side, though, I'm more confident and will size in at least faster and more aggressively. And for me, I love this market. I've been very unbiased, as you've seen, for months. And I think that the reason people are having trouble is they are too biased. They want things to bounce. They want things to do what they want to happen. But if you just take a step back, anytime you feel a little uncomfortable, take a step back, look at the big picture. And I think that you're going to make it a lot easier on yourself because the only trouble that I had, and I talked about it, was for like 2 weeks. And 2 weeks of, okay, we're not in that market anymore where you just let trades work. You're patient. You get on the right side of the trade and just kind of sit back and let it do all the work for you. Because what was happening is be on the right side, and then all of a sudden it comes all the way back up, and you get exhausted, right? And so maybe you're not losing, maybe you're not making, but at the end of the day you feel exhausted, and I don't like that feeling. So it took me, like I said, 2 weeks, and we covered that in the last couple Sunday videos, and it's been fantastic. And so I see a lot of people still having difficulty, and it's bothersome because you just have to adapt. You have to just say, okay, I'm going to stop doing what I was doing. And I'll remind you the story that I told you many years ago, and I think 8 or 10 years ago at this point. But my broker said, Nate, you're doing the same thing over and over and expecting different results. If you Google what that means he basically called me insane. And so I would, suggest that you take that to heart. And if you've been doing the same thing over and over, wondering why doesn't it work? You're being insane. You have to adapt. The same thing is not going to work every single day, every single year, year after year. Market changes. You have to adapt. Those that don't perish, right? You're not going to have a trading career if you don't know how to adapt. So stop thinking that, well, this used to work. Why isn't it working? Adapt and realize it sooner than later. And really the only issues that I see are people that are just failing to adapt. They know how to trade. They see the trade setting up, but they're not taking the trade when it works for them. They're overstaying. They want to see it do what they expected it to do, rather than just saying, you know what? I nailed that. I'm going to go ahead and move on. I'm going to look for the next one. And that's what you have to do in this market. I'm just going name to name to name to name and repeating, looking for the same patterns over and over. That's it. And as the liquidity dries up, I move on to the next one. Every time that there's these earnings plays, you've got at least 2 to 3, maybe upwards of 5 days surrounding that trade of really intense, great liquidity. You had Snap, you had Peloton, you had RBLX, you had Roku on Friday. All of these names are providing really, really nice opportunities. However, if you step in front of it, if you fight it, if you scale against the trend, you're going to get hurt. So you have to make sure that you're not fighting names right now, because the range is big. Things are happening that you wouldn't expect, and you don't want to be part of the exhaustion process. It's the biggest change that I've made to my trading, is not being part of the exhaustion and letting everybody else exhaust. And we've talked about it for weeks, so I won't beat the dead horse, but let everybody else exhaust. Stop being that trader that gets mixed up in all that. Let everybody else do that. So I will go over a couple things, video topics, but first, scans. I found my scans shirt. Brent Wilton, you've got scans for a month for free. Thank you for leaving a comment. Thank you for leaving a like. Thank you for watching. And then 2 t-shirts, Joey Touchstone and Polly Masters. So we'll be shipping you out a t-shirt as well. As always, all you have to do, leave a key takeaway. Just go to the comment section on YouTube, leave the timestamp and your key takeaway. It helps us make more videos, and it helps other people maybe go through and, oh, this made sense to this person. This was an aha moment for them. Let me go back and rewatch it. And you never know, your comment may help somebody else have that aha moment. So that's what it's all about. And selfishly, it helps us locate the best nuggets so that we can turn them into the little micro content for Instagram and Twitter, which you guys see us reproducing regularly. And so that's that. So I think, first and foremost, ISPO last week, right? Everybody wants to be part of ISPO. Everybody wants the next ISPO. What do you think the best traders are doing? They don't care about ISPO, right? They just care about where their edge is, where the opportunity is, and how they can make the most amount of money without, the liquidity risk that comes with something like ISPO, right? So there was a handful of other trades, FSRD, QNGY, ANGH, that all went nuts off of ISPO. Let everybody else focus on that one. And I went over it in the room, and when you have an outlier event, obviously everybody wants to catch that one. Everybody wants to be part of it. It's for whatever reason, everybody feels the need that they need to trade this stock that is going nuts, right? And they think it's going to fix all their problems. They think that they're going to nail it, whatever. Maybe you do, but more often than not, even if you did nail it, more often than not, if you take 5 or 10 different trades of that type, you're probably going to lose. And so that's why on ISPO you saw me, even in the room, I couldn't even locate a lot of stock, and then I wasn't willing to pay the price. So I think it was up to like $6 per share. I got 500 shares at 5 cents, and then the rest I think at like 50 cents. But I wasn't willing to risk it because there's just not an edge there. And I know what I suck at, and I talk about that a lot. Stay away from what you suck at, right? So anytime that situations like this happen, maybe I borrow some, but I won't size in. I will not size in low float types of trades because those are the outlier moves. All it takes is that one. And I think there was CPTN. And CPTN, you can see on the daily chart, or actually the intraday chart from, I think it was Thursday, went into a circuit. And I think it went from 10 to 50, 60, something like that, maybe even higher. But there was no letting anyone out, right? And it was almost like Kodak, only lacking liquidity. But if you step in front of the wrong one and it went to circuit to circuit to circuit, your career is done, right? If you had too much size, I'm not talking about guys with big accounts that might take a small portion short, but I'm talking about the folks that go in and they think their risk is $5, all of a sudden it circuit halts, $30, $40 up, right? That will end your career. So for me, those are avoids. And, something like ISPO, you saw me trade it like one time and, that was it. There was no other edge. You have that one exhaustion move, slams down, goes into a circuit, and that's it. And you see me go into broken record, avoid, avoid, avoid. Because for whatever reason, everybody wants to trade it. And I don't know why. I used to want to trade it. I used to want to figure it out. It's just what it is, right? As a trader, maybe a less inexperienced trader, for many years, that was me chasing that move and trying to figure it out and trying to make a trade on a move like that when really it was reckless. So that's why I've really focused the last 2, now probably 3 years of just moving away from that. Because I want to know that I can really sink my teeth into a particular trade and not have to worry about that one circuit risk or that one newsletter that comes in or whatever the case may be on a particular name. So the other part about that is, what does ISPO do, right? It starts to fuel all these other names that I mentioned, the FSRD and QNGY and ANGH. All of a sudden, traders now feel comfortable chasing these moves that are up, 100, 200, 300%, which makes 0 sense, but you just let them. And then after it turns, come at it. And that's exactly what I did on FSRD and QNGY and even ANGH. Friday was amazing. Friday was a really incredible day, and I did not trade ISPO. I didn't even care to trade it because I knew that that's what most people were going to be trying to figure out, and I knew that edge was elsewhere. ISPO was the shiny object that everybody wanted to watch and everybody wanted to nail. Meanwhile, take it off radar, and you've got all these other names that produced. A couple other notes. Confidence comes from preparation, okay? So there's a lot of other trades that are happening besides just the one that gaps up on the day or has earnings, right? And that is because, or at least the confidence comes from preparation the night before. And I'm not talking about in the morning when you wake up and you see something gapping up and you're like, all right, yeah, I'll probably trade that. I'm talking about, this meets my criteria. This has great range. And if it hit these levels, this is where I'd be interested in. You put those levels on your chart. Put those price alerts in the IU alert system. Have it, blare out like, hey, you just hit this level. Pay attention. That's where your confidence comes from, because you're prepared for that trade. You know what to do if that happens. And you know, most importantly, where to be wrong, right? It's not about, what's your stop really in this market for me. A lot of times people always ask me, what's your stop? It's where are you wrong? What makes your thesis wrong? And I think that when you prepare, if you put those lines, if you looking left, if you look at where things are consolidating, where they had trouble before, you saw it on AMC, you saw it on RBLX, went over that one where it had trouble at, I forget the exact level it was, RBLX, let's see. Then I can flash up an image of this. I think it was 55.70s. And when you drew a line at 55.70s, you saw it come back and exhaust out, before it unwound throughout the day. That is preparation. That's not just picking a number out of a hat. This is the key level from earlier. I'm going to watch this. I'm not going to be on the front side and anticipate that it's going to peak out there, because if it doesn't, that's when you start to get the faster move to the upside. But I'm going to let it exhaust out, and after it proves itself, I'm going to be part of that backside potential unwind. So that's one note that I had for today about confidence coming from preparation. I just feel like a lot of people just show up in the morning, look at whatever's gapping, and yeah, there's trades there, but how do you outperform, right? How do you have that exponential growth? It's not from just showing up in the morning and just picking a trade or two. It's from legitimate preparation and gathering that confidence from the night before as to why this is a good trade. One of the biggest, the next point I have is don't forget trades once the crowd is gone. One of the biggest ways, in my opinion, to grow your account is to trade the names that everybody forgets. And you guys watched last video, probably. You saw BKKT, you saw what happened, and you saw KSCP. So right now, we're in a market where, maybe there's not a ton of momentum minus Thursday and Friday. It's not a small cap momentum. So whenever there's a big mover, everybody kind of gets on it, right? And so what happens is it becomes crowded to the short side. And if it fades all day, great. But if it doesn't, it stays kind of strong and perks back up into the close, because all of those shorts came in, it didn't break down, and then they cover, right? And maybe it doesn't squeeze, but it pretty much holds like this all day, right? Most people will be exhausted because they held it all day and then they covered in the close. They say, the hell with it, I'm done. The very next day, all those shorts are gone. Maybe it gaps down 10 or 20 cents, so you're like, screw it, not going to watch it. Those are the best trades. Focus on the ones that people forget about because they're watching ISPO. And while they were watching ISPO, guess what? BKKT unwound all day. KSCP unwound all day. And I think there was a couple other ones. But I always give like 4 names every single morning to focus on quietly. Doesn't mean they're all going to go down. But what I want to see is it kind of push, fail to fall through, push, fail to fall through. And then when nobody's looking, they fade off radar. It's a great way to build your account without having to try to figure out what ISPO is doing, right? ISPO, great. Maybe you made some money. But guess what? If it went into a circuit halt, which it did, and it had more shorts than you expected, and it went into another one, where would you be? There's not really an edge there. And I'm sure people will have a different opinion. But for me, and for what I know about myself, I don't like thin names. And it's just not for me. Traders market, we went over that. Basically, stop finding reasons why it doesn't work for you. It's so easy to blame the market. It's not like it was before. Yeah, that's because you haven't adapted. So be honest with yourself, like we always talk about. And understand that the market has changed. But there's still a ton of volatility. And it's up to you to recognize that and stop making excuses as to why things are not working. I see people do the same thing over and over. And it's that hot trade of the day that everybody wants to figure out. Meanwhile, there's a dozen other names that will not give you a headache that you could be trading. One of the biggest trades that's been really nice for me lately is the relief rally, right? So relief rally in the sense that, you've got this huge unwind, AFRM, RBLX, and all these different types of trades that potentially, they gap down and they could rebound, and everybody gets excited about the potential of a rebound. But as soon as they stop going up, they have that nice unwind. But the potential of the rebound is exciting to everybody, so everybody wants to buy that dip. And then as soon as it rebounds and fails, they have the first reason to sell. And that's where I want to come in. That's when I'm interested in the particular trade. So RBLX, Roku, AFRM, those are all examples of what I would call a relief rally. It kind of gives that relief, okay, we're going to finally rebound. And as soon as people start to believe that, hey, we're going higher, that's when liquidation happens again, right? That's with the most liquid market. As soon as everybody's comfortable buying dips, they've done enough to prove that, hey, it's going to rebound, then they have a liquid market to start to sell again. Because what happens if they just sell, the volume starts to dry up. So you need to they're either going to have to sell it way down to keep the volume going, or let it kind of have these relief rallies along the way and then start to put pressure back on. The last comment was, liquidity traps. Those continue to play out. I've gone over those a million times. I don't need to go through it again, but there's different types, right? So not every liquidity trap means that it's going to go to the moon, right? So some of the low float type names that have 100, 200 million shares, sure, maybe those ones could have those outlier moves. And as you guys know, you should not anticipate an outlier move. At the end of the day, a liquidity trap is a time that there is a major amount of volume that's exchanged with no real ability for shorts to cover, and then starts to grind past that prior resistance point. And so Hook was an example of that recently. That's a very thick name. It's not something that's going to go, nuts, that's going to go into circuit to circuit and, never look back, like we've seen happen on, stuff like LGVN and names like that. Then you've got something like, actually most recently, KAVL. We went over that one. And last Sunday, the thought was it was going to go to 350. It hit 345, by the way. But example there, that's not a low floater. But what happens is you have all these shorts come in, this consolidation period, consolidates, and then it's either going to break down or it's going to break up. If it starts to show that it's going to go up and it breaks that prior resistance, you're going to have that cover come in. And that's what it's about. But remember, that cover is also your exit, right? Because that cover is the shorts coming out. So it's either going to catch shorts again, set up for the next liquidity trap, or that's it. And, it moves on. So a lot of times you'll see T+2, we call it. So something like IRNT. IRNT had a whole bunch of volume, came back for 2 days, held, and then at that point, there's probably some buy-ins, some covers, folks moving on, de-risking, and it starts to pop up again. And then after that, it starts to fade off. Very similar to BKKT and things like that. So MDJH, we just had one, and you could see how it ramped up, consolidated, and then broke out over the prior high. Again, you want to assume that that will fail. So if you were trading that liquidity trap, you want to lock into any power. You don't want to be buying into power. That would be the silly thing to do, because that's when shorts are covering. Shorts are that move. They're covering into that move. If you're buying the breakout, then you're just doing the opposite of what they did. So you want to be a seller into the breakout, and then if it continues to hold and starts to build over the recent high, you can always rescale back in, because sometimes you have that outlier type move. And then something like VVOS, where there's a huge volume candle and it consolidates maybe for a month, and then they start to come back in. So I don't have any position on VVOS, but it was another good example of how these charts vary, but it's something that's working exceptionally well right now. So that's how I'm trading this market. The relief rallies and fades, the liquidity traps, and then just really reactive trades off the open, 9:45, 10 a.m. plus trend joins. That's what's working right now. That's what I'm sticking with. All right, guys. So for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're okay with that, continue. Because this is, where I try to educate you on what I think makes a good trade, or maybe what does not make a good trade, what to stay away from, and kind of traps to look for, and cautious of the crowded trades, all that kind of stuff that plays into getting an edge on particular names. If you're looking for buy or sell recommendations, I'm sure there's plenty of people online that will tell you what to buy or sell, but that's not what we do. And be careful, looking for that in your career. I think it's really about understanding the why, what makes a particular trade good, versus being told what to do. Because over time, you'll realize that you're going to become dependent on that, and your success basically depends on somebody else. But if you're able to actually understand the why, understand the concepts, what makes that good trade, you're going to be able to take these trades by yourself. You're going to be able to pick your own entries. You're going to be able to pick your own exits. And you actually might have a chance to do this long-term as a career versus just, a hobby shadow trading, somebody that, you think is going to bring you to millions and millions of dollars. So, Roku, this one, like I said, surrounding earnings reports, I feel like you have, 2, 3, up to 5 days of edge. An example of that is, RBLX, which is the next one on watch, but, where we have, so far we've had 3 days of nice opportunity, nice range, and same thing with AFRM, where we've had, 1, 2, 3, 4, 5, 6 days of really good opportunity, maybe 4 of those. But basically what I'd be looking for on something like Roku is I'm going to go back and I'm going to look at how it traded on Friday. And then you can see that it pretty much held throughout the day. You're either going to find out was Friday a day where new buyers came in and dips are going to get soaked, or was it a day where shorts kind of came in, they covered and got exhausted out? So I think the key levels are going to be around that 114 upwards of probably that 115 level right over there. So some type of exhaustion through 115 in the morning would be ideal, and then look for it to fade back down. But you probably want to assume that that 105, 106 level is going to hold. So for example, the way that I use this is if I were to nail a trade off the open and it looks like death, and it looks like it's going to go to 100 or 95, 90, whatever, I want to assume that 106 is probably going to hold. I want to be proactive with covers, assuming that it's going to probably hold this area. Whether it's 104, 106, 105, doesn't matter to me. But I want to size down a little bit into that level. Otherwise, I'm going to have max exposure. And if it were to rebound off that level, I'm going to miss that opportunity. So that's kind of how I prepare for that sort of stuff. RBLX, I was mentioning this level, and we use this level 55, 70 in the room. And you can see that it was pretty much the prior base over here. And then you can see how it exhausted out at those levels. You can also see how it was having a nice little base here at the 54 60s. And then as it finally broke down, it pretty much held a peak at that level as well. So that's the kind of stuff that I look for. I don't want to get chopped in between a channel. I want to take advantage of the move, either to the upside or the downside. I don't want to be getting chopped within. So the way that you prevent getting chopped within is to make decisions towards the top or the bottom of the channel and not necessarily assume that it's going to break down under this level, or not necessarily assume that it's going to break out. A lot of people position in and then they get nervous at the top, right? So if I'm positioning into a trade, I don't want to be emotionally attached where I'm freaking out at 55.70s. I want to be calm, cool, collected. I want to be like that always in my trades. If I'm ever not comfortable, I typically size down. But you don't want to have an emotional attachment to the top or the bottom of the channel. And I think that if you draw these channels in size accordingly based off of those levels, I think it'll help you stay in a trade when you should be staying in a trade versus maybe being a little bit too big and covering into that exhaustion move, because a lot of times that's all it is an exhaustion move. So keep that in mind. RBLX, higher the better, failed follow through. At some point, we probably do have a rebound, but so far it's been having a tough go since the earnings. And this is one of those where it's very heavily crowded. And if you guys remember, and we've talked about this before, just because the stock has pulled back 50, 60, 70% does not mean it can't fall back another 30%, 40%. And here we are. This is DraftKings, right? We just had that move, and you can even look at BLTR, right? So we've gone from, what was that, 26s, 27s. We lose $10 a share. Now we're sitting down about 50, 60%, and guess what? We go down another 30% or so. So there's a good chance that this could go right into the singles. I know Kathy sold, I think, 10 to 13 million shares, something like that, just Friday alone. So there's a lot of supply right now. And supply, it takes a while to work through. It's not going to just go right back up. So we still might have that downward pressure. So just be aware of that. If you're trading these types of things and they rebound, this is getting back to what I was saying. Just because it rebounds hard does not mean that it's going to be a full day. It could be a relief rally. You have that little relief, and then liquidation comes back in. So be cautious. If you get a good trade, take the good trade. Move on. UVXY, reactive trade. As you guys know, this is not opposite the market. The reason why I use the market is because typically when things are in panic mode, SPY is obviously, unwinding, and then volatility is typically at the high. So I do use the market. I do use whatever's leading. Sometimes tech might be leading. Sometimes other things may be leading. But I use that as a guide for, what's the market doing? How's it reacting? What's happening? And as the fear goes away, obviously you see this thing unwind. So we had a really nice opportunity on Friday. We had a nice rebound trade, but the thing is you don't want to expect that that's going to be the full day type of move, right? You had a huge rally. And if you think that that's it, you nailed it, guess what? Went right back to where it was, right back to the lows. And that's very important, because that is the current market, and that's the 2 weeks that I was talking about where I was kind of like up big, and then I either turn it into a loser or turn it into a flat trade, and I was getting very exhausted. This is the kind of action, right, where you absolutely nail a trade, and then it hangs around, and you're like, I did it again. I overheld. Keep on doing the same thing over and over. So at some point, you need to be okay with, hey, this was a great trade. I'm going to move on, or I'm going to at least lock in a good chunk. I used to lock in like half. Now I lock in 3/4 or more, and maybe I'll just keep on a little bit of a feeler in the event that I am right and it continues to go down. Most cases, it starts to, rally back up. TWAC. This one's going to be interesting. I don't know if we're going to gap up 10, gap down 10. The app is down because the demand's so high. Who knows? So this is going to be an interesting one to see how it plays out. I still don't know when the merger is complete, when we get the new ticker. There's not much information on it. They announced that $1 billion pipe, but then, it's been kind of cricket since. So I think they probably need to get this app developed and actually have a product in order to raise it, but who knows. Moving on to failed follow through. NRGV. NRGV. Can't type. There we go. NRGV, higher the better. This was a fantastic trade on Friday. This was my focus instead of ISPO. I was focused on this one. I felt like it was going to give the best opportunity. There's also a lot of retail, newsletter type involvement, getting a lot of people on the wrong side, making people think it's going to be the next ISPO. And then as you start to see sellers kind of come in, you know that there's going to be a lot of people on the wrong side of the trade. So we got a fantastic unwind. I was really happy with the trade and how it panned out. I dabbled a little bit pre-market, and then I scaled in once the market had opened. And Just a fantastic opportunity. And for me, I don't like to trade contra newsletter, for example, right? That's what happened to me on Kodak when I lost a whole bunch of money, because you start to get this confidence that a newsletter is the only reason that it was going, and so on and so forth. When too many people have that same thought, it never ends well. So I like to let these moves kind of digest and move out, move on, and then start to kind of come in. But NRGV, I'll be watching higher the better. QNGY, same deal. FSRD, same deal. Now, QNGY was a fantastic, like 50% off the highs or more. I think it was, more than 50%. But I shorted here. You can see the trade. And it was just a nice exhaustion move that I had posted in the room. A lot of people are just chasing things they have no idea what they even are because they want to be involved in the next ISPO. That's just where people are trained to just want to be part of the next big thing. They don't care what price it is. This stock went from 10 to 100. So, the fact that I'm chasing 3 to 8, it's cheap, right? Because it's going to go to, even if it goes 30, meanwhile, it goes down 50%. So, a lot of people lost a lot of money chasing these things. And, it was just a matter of time. I warned about it Thursday, about how many haircuts we were going to see. But that's on you. And unfortunately, people need to learn the hard way sometimes. But you do have the ability to avoid these. The warning signs are there. The warnings were there. And the reminders. So make sure that, you're not falling for this stuff. FSRD, same thing. Very similar to the other one I was talking about, CPTN, where you've got basically a stock that kind of goes circuit to circuit to circuit to circuit. You don't really have an edge, right? So FSRD, I didn't want to get involved in the front side of the move. I'd rather be late to it. But as you can see, I got involved a lot lower after it exhausted everybody else that was trying to find the top. Proved to me that it rebounds, fails. And keep in mind, a lot happens within 1 minute. So although it's like, oh, how did you figure it out in just 1 minute? Think about how long a minute is, and there's a lot of action that you can see, a lot of tape, a lot of sellers that you might be able to pick up on, and how it reacts when it should have potentially rebounded. And I think that's the easiest way to explain. A lot of people ask, how to use the 1 minute chart and all that kind of stuff. A lot happens in 1 minute. A lot happens in 5 minutes. So use whatever, you see the trade on. But on, moves like this, I think 5 minutes, you probably missed the trade. ANGH, same deal, same trade concept. But so all 4 of these, NRGV, QNGY, FSRD, ANGH, I feel like one may get away, where everybody's just fading, and then somewhere out of one of them, there's too many shorts, and then maybe it has the rally. Maybe it makes the other ones start to pop back up a little bit. I don't think they're going to go crazy, but I'm going to have my guard up on the one that maybe gets away, let everybody exhaust out, and then start to come in. But I don't see why these wouldn't just kind of fade back to where they came from. This was a great liquidity event for all the bags. You can see how these all came off 10, and everybody was upside down anyway, and here we are. So KPTI and ENOB, great charts going straight up. I always look for steady trends. You can see the wicks, they're getting bought up, wicks again gets bought up. So these can last a lot longer than you think. But I'm waiting for that day that they fail. I want to be part of the day that it's failing. I don't want to be part of the day that it's up a lot, expecting that it's going to fail, because the day that it's up a lot, it can go up a lot more, and then up a lot more. I want to be part of the backside of the trade. So these are 2 trades that I'm not looking to find the top on, but just looking to, once everybody forgets, like BKKT, I want to be there when everybody else forgets. And then I'm monitoring REDU. To me, it feels like last time this was like a Chinese pump and dump. So I'm just kind of monitoring. It feels like they're coming back into it, and maybe we get another shot at that again once they decide to liquidate. Other than that, long side, BRCC, I've been swinging this one long the last 3 days. I sold a bunch over 22, sold a bunch over 21 on Friday, but I'm keeping a core. To me, you know, if you guys remember, I was fading it after. It was some really nice trades, but it was holding exceptionally well, and you saw each time came down, 1360s came down, 1355s came down, 1355s, right? So right there, that should tell you something about, you know, what they're telling you. 1355s, 1360s, they were basing it there. So you've got this wick down to this seller. You've got this wick down to this seller, or excuse me, the buyer. Wick down to this buyer again, right? So 3 times it's proven that there's a buyer there. So anybody that shorted this, if it starts to break out over these highs, they're going to be in a pretty bad position. So in my opinion, there's actually a lot of shorts on this thing, and I think that it could be one of those types that does have that outlier move. We haven't had a SPAC merger type name have one of those crazy moves in a while. But again, I've been selling into the rips, but I got long at 17s when I had mentioned in the room that I felt like shorts had kind of gotten in a tight spot. And I'm just letting it work. So if I'm wrong and it stays heavy, then I'll move on the rest. But I've locked in around the core. I'm in around 17s, and I'm letting that trade work in case it wants to go circuit to circuit or do something crazy, go 25, 30, 40. We haven't seen it in a while. Yeah, we saw it on a few of these thin names, but we haven't seen it on a post, you know, SPAC into new company type trade in a while. And to me, it just feels like there's a lot of shorts involved. The only risk I would say to be aware of and to watch out for is if DWAC starts to go down and fail, then you want to be probably cautious just because they like to tie it to Trump. Hook. Weak opens could potentially continue to go and break out. Otherwise, let it squeeze out, and I'll be looking for a fade later on. But you can see, again, the wicks. Then we talked about 215 level in the room. And if I just go 215, then go to the 1 minute chart, you can see why that level was important, right? So we had a top here. We had the exhaustion move over here, top again, and then we started to base over it and continue on. So like I said in the room, as long as it doesn't break under 215, shorts are stuck. VVOS was another example of the liquidity trap type play. I don't have a position here, but same concept. You've seen it over and over again. MDJH, same concept. Like we talked about, 287, whatever. 287 was sort of that trigger point. So you want to assume that breaks, it's going to squeeze up, right? You don't want to be a buyer in there. You want to be a seller into any, you know, big move. If it starts to build over 287, 290s, then you might have that secondary squeeze out, which is, you know, sort of why it's still on scan. I still have a position. What interested me in it was, you know, the 30 million volume, and then it goes down to, you know, no volume, right? So this is a relatively thin name. Nothing that I would chase. But, you know, if it continues to have trouble at 290s, obviously I'd be selling. But the most important part is when you see a trade setup like this, you don't want to be buying breakouts. You want to be buying when nobody else cares about it. And so you got to think about how that liquidity trap plays out. It's either going to play out and that breakout is the squeeze and everybody gets exhausted into it and then it fades off. And you saw that with IRNT recently, right? So you had this huge volume day and then you had this kind of, it was hanging around, squeezed everybody back out, but it failed at that prior level and now it can fade back off. Same kind of concept, but this is where it exhausts out and stuffs everybody and fails up, right? So I always like to assume that's what's going to happen. And then if it proves otherwise, then you know shorts are still stuck. But that's about it. So I hope you guys have a great rest of your weekend. I hope it was enjoyable, long weekend. We'll see you guys all in the room on tomorrow, Tuesday. And that's it.